what would you say will be one hidden clause in most policies that most people overlook when it comes to owner insurance, which is the most important clause in their policy? Thank you for joining Wealth, Legacy, and Property. On this podcast, we discuss issues related to real estate and also recommend ways that you can leverage real estate to actually build wealth and leave a lasting legacy. On today's episode, I have my good friend. He's back. We are going to talk more about homeowners insurance. Brent, thank you for joining us today. How have you been?
Oh, thank you for having me, Patrick. I've been well, and it's been a forever-changing landscape in real estate. So I've been having a great time watching your videos and learning more from other professionals in the space for sure. So
Thank you. In our previous two episodes, we did talk about the types of home insurance and also busted a few myths when it comes to homeowner insurance, right? Today, I want to dive slightly deeper, focus on a few things, key things. And I guess this is also based on my experience with certain clients and some of the questions that they usually have. To begin with, what would you say will be one hidden clause in most policies that most people overlook when it comes to owner insurance, which is the most important clause in their policy?
for sure. And I wouldn't say that it's a clause per se, but I would say it's normally things that they know they didn't have coverage for until it was too late. So I would say that it would be more so hands down would be water coverage.
Okay.
So we're talking things to do with mold, we're talking leakage and seepage coverage and utility lines. Those are the big three that are not really hidden, but I don't think they're really laid out too well within homeowners policies because you have your standard coverage A through F, right, which is dwelling coverage all the way through medical payments and liability.
Right.
But there's the utility line, which is lines out in your front yard that is outside of your
Okay.
foundation, right? The city pipes,
Mhm.
drainage systems, right? So if that pops and you're doing an accidental, like that, replacing that pipe is going to be on you. So that's the first one. The next one's leakage and seepage, which is going to be slowly dripping water within your household walls between the frame and the drywall, right? You're not going to see it right away until it starts seeping through and there's enough accumulation of water. And then obviously with that, over longer periods of time, becomes mold and fungi. So those are
I see.
going to be the miscues or hidden clauses in an insurance policy that you might want to add more coverage for because they don't really come with any to begin with and specific coverages.
So would you say that would this be better for newer homes or newer homes and both newer and older homes or just older homes?
Honestly, I would say this is for any home. The leakage and seepage one for sure, and mold and fungi apply to both new and old. But the real kicker is going to be the mold coverage, right? Because I don't know if
Okay.
you've seen on the news or articles, but some new builds even have mold problems because the plumbing wasn't done
Really?
right, it was incorrect, and people have had mold problems within their brand new home. So I think it's kind of a mix of both.
I
Utility
see.
lines, you're probably not going to have a problem within a brand new home build because obviously those pipes are brand new. They're not backed up with 20 to 100 years of crud in there, right? So I would say that they're probably pretty applicable to new and older homes.
And to add that extra coverage, does it usually cost a lot?
Depending on the carrier and what the price has been set at for the client, if it was a $2,000 home policy to begin with, it might be $200 to add on the year that $2,000 policy for leakage and
Okay.
seepage or utility line coverage. So if that $200 breaks down to $16 a month over the course of a year, And if you have
Mm-hmm.
one $10,000 claim, you're looking at a $10,000 claim. You're paying $200 a year for 10 years. That's $2,000 with a return of $8,000, money that you didn't spend out of your own pocket. You know what I mean?
Right.
So I think that these are some of the coverages that are definitely worth it.
So, with that said, what would be another insurance mistake that you've seen other clients, especially affluent homeowners, make when it comes to purchasing homeowner insurance?
I wouldn't say if it's a common mistake. I would just say it comes down to decisions. I really think that people make mistakes in their decisions to go for the
Mm-hmm.
cheaper policy when
Okay.
they're closing on a new home. So whether it's their favorite carrier or different carriers, I really think that they should have a consultative process
Mm-hmm.
to getting home insurance and not just the standard email me kind of
Okay.
thing. Just email me, send me your best rate, right? Because then I don't have to have these conversations with homeowners, right? I don't get to talk to them about utility, water backup, leakage and seepage. I don't get to tell them all the exclusions within their home policy because that's the number one area where people have complaints, right? When they go complain about an insurance company, it's usually because the agent never told them. So I would
Mm-hmm.
say that it's going for the cheaper policy and not looking into an umbrella policy as well. I think those are probably the two
Okay.
things that I'd recommend people actually have a discussion about their portfolio rather than just trying to do it over text or email.
Which leads me to my next question, umbrella policy. I know we've had a brief conversation about this recently. Can you explain to us what an umbrella policy is, to one, and if
Yeah,
there is a use case, share with us?
no, absolutely. Umbrella policy, just to go there first to get to the brass tacks. So you have your home liability, right, of $500,000, let's say, because that is the minimum requirement to obtain an umbrella. Usually, sometimes it's 300,000, but that $1 million would be stacking on top of your home liability of that 500,000. So now
Okay.
your total exposure coverage would be 1.5 million if someone tries suing you, if someone tries, says all that fun stuff is going to be that 1.5 million dollars in
Mm-hmm.
coverage. And then also it bounces over the auto. So if you drive vehicles, own vehicles, you get that 1.5 million in liability for an auto accident, right? And it's an accident for a reason, right? I don't think there's people going out there trying to hit other people. It
Right.
just happens. To have that extra coverage and how sue people, how sue, I think it's definitely important to look into that umbrella because, to give you a point or an example, normally people come to you about umbrella insurance after it's too late.
Yeah.
It's like they're like, oh, yeah, I've been wanting to talk to you about umbrella insurance because we just got in an accident and I'm like a lawsuit and my auto insurance doesn't cover enough. Or something happened with
Mm-hmm.
home, or I have a pool and something happened. And I'm like, well, now that we have a major claim on your record, whether it's your property or auto, your
Mm-hmm.
eligibility in qualifying for an umbrella policy just went way down or your price
See.
goes way up because you're a
Yeah.
risky client to insurance companies.
Right.
So the horror stories are really, you hit a bus, you hit a pace bus, and the six people on that side that you hit, 500,000 is not going very far
Yeah.
if it's a, you know what I mean,
Right.
Patrick?
Yeah.
So,
So let's go to the utility lines, right? Let's assume I
mhm.
have an umbrella coverage on top of my regular policy. I'm assuming it's still not going to cover my utility lines, right?
No, I know it
Okay.
wouldn't, unfortunately. It just stacks on top of like your current liability. I
Okay.
actually had a question the other day that was similar for a condo in the city of Chicago. Like, hey,
Mm-hmm.
I got water backup because just in case my condo leaks water into the one below me, I want to have $25,000 for water coverage, right? And they're like, but what if I get that umbrella? One thing add in dollars to that water backup coverage. And unfortunately, it doesn't, because it's just the liability, lawsuits, and injury,
Mm-hmm.
coverage. So want, higher limits because water backup's typically excluded and utility lines typically
Mm-hmm.
excluded. Just because they want more, their carrier might not offer exactly what they're looking for. But there are other carrier options out there that would allow that client to fill their need.
Okay. Okay. In your be the biggest lie real estate investors tell themselves when it comes to insurance?
Give me one. I think that I themselves out of it. I think that the money is right there and taste it, and it's all a lie, right? Until
Yep.
the moment something happens. It's typically, oh, this one happened to me, this can't happen to me, that kind of, and then the is that I am help people on their worst day.
Mm-hmm.
It's like, you went with the other carrier because it was option did have that, and then they're calling me the next year later, oh, so and so is dropping me because I had this, large claim, too many $0 claims. And it's just and I want to recommend things so that they don't have that worst day get even worse.
And I do that. We've had as you know, I also work with investors, right? You help one of my clients get coverage recently.
Hmm.
So all of a sudden, we started getting phone calls about the coverage. And this guy was literally trying to get us to sign up for a different coverage. So when I started asking him questions, right, he wasn't giving me straight answers. So I did call you and you were able to explain the policy that I have. So I think for the average investor, most of them are not that educated when it comes to home insurance, right? Because even though I've been an investor, I always think, oh, I just need insurance for my home. But thinking through it, there is an insurance for an investment property is going to be different from coverage for my own primary residence, right? And having that conversation with you, you were able to tell me, look, you guys already have the coverage that he's trying to sell you. So there is no need of, going with him. So in this case, I want us to stay on investors for a second, right? Investors and I guess affluent clients who usually have the money to pay for it, but they need it has to make sense for them to pay for it, right? This is based on my experience because I'm not just going to pay for something when I really don't know what I'm paying for. So in this
Exactly.
scenario, uh, what should one do when they are reading their policy? What are the things they need to look out for, to ask questions, and to even figure out whether they need to add additional coverage? Break it down from, let's say, primary residence, investment property, and even home that is vacant and rehabbed, or home that is vacant and nobody's living there because the owner doesn't want to deal with it. I know people as homes, investment homes that are vacant. It's not abandoned, it's just vacant. They don't want it yet.
Yeah. Um, no, that's a great question, and I'm glad you
Mhm.
brought up your investor side and your other. I think sometimes it's looked at as another bill, or it's just something
Yes.
that I'll say us insurance, try to get. You might think there's a stigma there, against insurance you to pay for one more thing. But I just do, and the client is. I want to be able to talk through the situation, and it's not because I'm a sweet talker and lay down in any direction I want to. It's really because I give you the information right here, right now, without going to
Right.
my Wikipedia page of insurance
Mm-hmm.
knowledge.
Mm-hmm.
And I'm an investor, and you're affluent, and you're making good money, and your time is money, right? You're really
Right.
holding on to it because it's the only thing you can't buy in this world. That's up for debate,
Mm-hmm.
though. Um, is they don't have time to talk about their insurance, or they don't want to make time to talk with an insurance agent. And I get that. I do. Like, I get why I don't want to discuss and talk, because an email is so much quicker, right? But it's hard to explain those things for someone to grasp it if you don't know how they learn.
Mm-hmm.
You know, that I go in depth of how they learn, and give those, their homeowners fix and flip that you're doing, or just a vacant home that they're holding on to, like you just said. And the main differences for investors out there that don't want to talk to an insurance agent but want to watch our podcast episode here, is that the law is a huge piece. Who's living
Okay.
in the home, and is it premises liability or personal liability,
Okay.
right? Because if it's a rental property, it's going to be premises liability most
Okay.
oftentimes, right? Where it's only going to be if something happens on that parcel of land and that property's in your name, then
Okay.
you are liable for it, right? So that's the distinction, right? If you have a home policy
Mm-hmm.
in your name, the insurance company thinks you're living there, you have a claim with a tenant that's not family, now it gets sticky. Now you're looking at
Yeah.
a denied claim, a $0 payout, that
Mm-hmm.
kind of. But also, I just think of rents. Like, that's another one. Home
Yep.
policy, you have loss of use, and then on a landlord policy, you have loss of use in terms of lost rents, or like a fixed income. If the home can't be rented out and you're not making, dollars per claim occurred at your property, the insurance company will give you basically a stipend per month of that home not being habitable. So that's
Okay.
another key difference. Um, and then personal, if you own not sure, you're gonna have your stuff from Amazon, IKEA, whatever, furniture store you home.
Yeah.
um, I get it. But that property is still yours, and if something happened to the home, say like a fire, that cut into your profit margins
Yep.
extremely if you had a $0 personal property coverage, because you can do
Yeah.
that, but you still have appliances in that home, washer, dryer, refrigerator. Those are, whether it's an
Mm-hmm.
Airbnb or a long-term rental, right? So you want to have some personal property for that, but maybe not the 40% of your, 500,000 that you, right? Because typically personal property is between 40 and 70% of your dwelling amount or replacement cost. So if you look at your, coverages, that's kind of that's typically the average for personal property. But for a rental, you're probably looking at, 10, 25 property. You're not at, 250K, drastically lowering that, because you don't have much in the home anymore because you're renting it out.
That's interesting. So, in essence, looking at Airbnb, so let's say I buy a home and I tell you I'm going to use it for Airbnb. Am I going to get coverage like a landlord policy, or just a personal use policy?
Yeah. So it's actually funny because I
Okay.
just saw someone the other month about it, but different
Mm-hmm.
companies write it on different forms, right? So you
Okay.
would have to have what's called like an endorsement on a home policy. It's like a
Okay.
home sharing, in where it's like
I see.
under 52 weeks, under how 180 days that the
Mm-hmm.
rented, and then some do it on. But the
Okay.
funny thing is it's crazy to me that not every insurance company wants to write Airbnb properties.
Yeah.
And you may why, and it's because there's so much foot traffic. There's different tenants. People typically go to Airbnbs to party. It's not
Mhm.
to worry about a hole in the wall once you leave an Airbnb, because you'll just pay for it, or the landlord
Yeah.
will file a claim for it, and you don't have to look at it for the next 11 months of your rent. So Airbnb is a little bit more pricey in terms of insurance, just because of, what may the
Mm-hmm.
expectation of the liability.
Okay. Brent, thank you so much again for shedding light on our policies. On our next, we are going to actually look at renovation policies and hacking, since now it's the common thing to do. Most new investors or professionals, younger people, to study real estate investment, leveraging on that. We will talk more about that. Thank you so much, Brent, for us.
Yeah, no problem,
Okay.
Patrick. A pleasure.
Thank you.